Welcome to the Jay Kim Show, Hong Kong's very first podcast focused on entrepreneurship and investing in Asia. Join us as we survey the land and discover the greatest companies and most profitable investment opportunities in Asia. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insights to you, the listener, with every single episode. And now, on to the show. This week we have a special guest by the name of Valentin Preobrazhenskiy, who is the CEO of a company called LAToken, which is the first multi-asset tokenization platform in the world. So crypto is all the rage these days, I'm sure all of you listeners know. I myself am not a crypto expert by any means, nor am I invested in any of the currencies, mainly due to the highly speculative nature of the asset class, if you can even call it that. LAToken was the very first crypto company I heard of that actually excited me because it's an exchange that allows anyone to tokenize real assets to be traded like any other of the currencies. So tokens can be backed by anything ranging from precious metals to rare and fine arts, to even blue chip companies such as Apple, Google, and Tesla. One of my hesitations to investing in something like Bitcoin was the fact that there was no fundamental basis for price discovery, and the future of it as a currency relied solely on the transaction volume acceptability. LAToken, on the other hand, provides asset-backed tokenization, which is actually quite revolutionary. Valentin will also be hosting the LAT Blockchain Economic Forum in New York on October 31st of this month, featuring many of the industry players, the major players in the cryptocurrency world. So for any of you US-based listeners that are close by to New York, we'll include all the information in the show notes for you guys to go and check out that conference. All right, let's get on to the show. Hi, Valentin.
Hi, Jay.
Thank you so much for joining us. Welcome to the show, and we really appreciate having you on. For our audience listening in, perhaps you could give us a quick introduction, background of who you are and how you got into cryptocurrencies.
Yeah, thanks a lot. I am founder of Liquid Asset Token Protocol and Platform. In short, it's LAToken. We tokenize and make tradable assets in crypto. Assets ranging from currencies to equities, commodities, real estate, and so on, from liquid to less liquid. And our protocol helps to connect token issued on our platform or with the usage of our protocol, compliant with this protocol, is connected with underlying asset, and this link is enforceable. So we launched trading in a test mode of 12 instruments. It's a token linked to Apple shares prices. It's a token linked to gold, and token linked to commodities, to oil, to real estate ETF, and we have an obligation to pay at the settlement date cash equal to the price of underlying asset. So now it works. When I say that these are test trades, this means that this link is our obligation. It's not done in completely independent way. It's not like just smart contract working directly with independent custody. We will plan to create this in the future. And then there will be no counterparty risk in terms of, LAToken risk. There will be a custodian of big bank, which is regulated, which has capital adequacy, and there will be smart contracts which make sure that sufficient amount of shares are reserved, and that they will be sold and cash will be delivered to token holders. And this will be a very robust, automated, super efficient, cost efficient and fast. This allows investors, crypto investors, to diversify their crypto portfolio into real assets without exchanging crypto into fiat, sending money to bank, then to broker, to custodian, then vice versa when they reverse the trade. So it's high time and money costs, which is erased with these tokens. By the way, these tokens in some jurisdictions are not available until we make proper legal setup for these jurisdictions. First of all, it is about USA. They have very advanced regulations for securities and asset-linked tokens. SEC clearly make clear that asset-linked tokens should be regulated as securities. That's why these tokens are not available for US investors. Now I'm saying investors because they actually invest in this token. Do not confuse it with contributors who buy utility tokens. It's very different. So this investors shall provide information about this. We use a KYC procedure before we allow trading to make sure that only eligible investors can trade. So we are very careful about regulation. We think that industry will have some form of self-regulation and also some regulation which will help the industry. And we want to kind of to spread best practices there. These asset-backed tokens are very different from LAT, which is utility token. Utility token do not represent any potential future cash flow, no dividends, no linkage to any assets. It's like prepaid card for services. So it's that's a similarity which Gil Pincina mentioned in his TechCrunch article. So utility tokens is a payment for potential future services of a platform. There's no linkage to any assets or any cash flows. So utility tokens are not scrutinized by SEC. So SEC is very robust and consistent. They scrutinized 5 tokens, which were linked to assets, and they didn't move to other area. They didn't make any statement regarding utility tokens. However, this area is still not clear, and most of ICOs, most of token sales are now closing access for US contributors. I think this is a reaction for sentiment from China, from South Korea, and we follow this trend. So we don't want to be the last token which is still open for US contributors, so we also closed offering for new US contributors. This doesn't change anything for those who contributed before. They have their own terms when they purchased LAT. So this token allows to pay for our utility services, like tokenization of assets, when we will set up proper legal framework to be able to do so. And for transaction fees, this can be also exchanged to other tokens, other utility tokens like Ethereum.
Right. Okay, so I think that, well, first of all, Valentin, thank you for the very detailed introduction. I want to, before we continue, because I know that your company is something quite novel, and I think that it's, if you follow the space, it's definitely something very exciting, and it's unlike any of sort of the other technologies out there or companies out there in this space. But before we take a step down there, why don't we take a step back and let's talk a little bit about, perhaps you can talk to us a little bit about your background and how you came up with this concept of creating a liquid asset token platform, infrastructure exchange, if you will.
I traded equities for 15 years, and I worked at hedge funds for 7 years. I was director of research at Swiss hedge fund for portfolio $200 million, and then I founded my own hedge fund, Avega Capital. So I know in details how capital markets works. I love this. Investors make a very important thing. They facilitate a movement of money from those who have money to those who can make most out of this. So they predict future of countries, of industries, of technologies, of companies, and they try to predict who will create more value and bring resources to this value creative hands to companies which will be more productive in the future. These companies get capital to hire more people, so people get more vacancies, which is more productive, and they live their life more productively, and this spurs economic growth. So capital markets delivering of money in a smart way, in an efficient way, is very important for everybody, and I love this. So I see that cryptocurrencies, blockchain, are transforming financial system. Now, in order to create a new currency, you just need the smart contracts and blockchain, which is already operational, and you make it in a few minutes and replace infrastructure which was built for centuries and include 100,000 people, including in central banks or Federal Reserve, including in banking infrastructure, which count in who owns money. Now you can just issue token which has built-in property rights for this token, and this works fast. This was very cost efficient, and this is a tremendous progress. And this works for capital markets.
So essentially, the way I see the parallel between LAToken, the platform that you're building, it's essentially like an exchange, like a stock exchange, if you want to draw parallels that way. And you're using real assets as the basis and the backing. And I think that it's an important move and distinction to make, because okay, so with something like Bitcoin, I think people are on other opposite ends. It's almost like religion or politics. Like, people get very involved in the discussion around Bitcoin, and many people say that Bitcoin, the arguments against it is that there is no underlying asset, no mechanism for price discovery, and it's all speculation, which I actually, as an investor myself, Valentin, I kind of tend to agree, because I cannot figure out a way. You used to work at hedge fund, you traded capital markets, you know that there has to be some basis for us to analyze and value a security for us to be comfortable trading it. So how did you come up with this idea of using liquid assets to back tokens, basically?
So actually, assets became liquid after they tokenized it and became tradable in crypto on our platform. And this is applicable to assets that are already liquid, such as stock, and illiquid assets such as real estate and perhaps works of art. And by the way, when you make them liquid, you do not only decrease transaction costs, which are 30% for works of art and 5 to 20% for real estate. You also provide liquidity premium, which is 10 to 40% for equities, which moves from private to public. This is the liquidity premium should be also applicable for illiquid assets when we make them liquid with tokens. So how I came to this idea, and actually I was thinking about Bitcoin. I agreed that it's a bit volatile and it's difficult to make price discovery because it is most of all based on expectations of future usage of this Bitcoin. This is a problem that for currency it is important to have stable user case. So many people use it. Oftenly they have current accounts balances in cryptocurrency, and some of these balances is like a demand for this currency. So the more people have their wallets, the more they store on these wallets, the more demand for these coins. And they have these wallets and they store balances because they need it for transactions. And there is a competition between Bitcoin and fiat currencies. And there is a big scale effects, which is an advantage of fiat currencies. And Bitcoin is kind of use it in niches where parties have problems with fiat currencies, but these niches are not big, and they are sometimes risky and so on. That's why Bitcoin is volatile. If we will have a more steady growth of user cases, and there will be a more steady price growth. And we believe that the biggest user case for cryptocurrencies is to start trading real assets in crypto. So not only kind of niche transactions, but we want to make a big user case where Ethereum, Bitcoin, and LAT are used to trade trillions of dollars of value of real assets. And this is a very clear user case because we save huge transaction costs. We save, we provide liquidity premium when we tokenize real estate and illiquid assets. We save costs when we tokenize stock and commodities. These costs are not big at fiat markets. It's something like 0.05% if you trade via electronic trading. However, there are problems with settlement date. It's T+1, so a few days needed to settle a trade. And also, which is a big cost, it is leverage. Leverage costs something like 3 to 7% in dollars. If you want to make leverage for some of the instruments, there are cheaper ways to provide leverage. However, in crypto, leverage is far less expensive. And what is the most important that we start from providing opportunity for crypto investors to diversify their portfolio. So they can, when they think that market become too volatile, crypto market, they just buy tokens linked to real assets, and they get out of risk of cryptocurrencies. And they do this without costs of transferring funds to fiat, sending it to bank, to broker, to custody, and then in reverse order. All of this is time-consuming and costful, as I said at the beginning. Also, a big opportunity in decreasing OTC costs. OTC costs in fiat markets are done with 0.20%. There are a lot of back-office work to settle them. They are done via phone. These trades can be done on blockchain far more effectively. So these are just a few of user cases, and there is also a scale effect user case. We can provide access to trading 24/7 to all asset classes, to all origins in one place, so you can have comparable instruments which are built on the same protocol, which are built by different assets owners, and they are transparent. It's very easy to diversify portfolio across multiple asset classes, to make your strategies, execute them effectively, follow other strategies. By the way, we are launching today, and you are the first outside. This is the first announcement of our company to outside world that we are launching LAT Crypto 50 Index, which will work like Dow Jones. So traders and funds will be able to use this as a benchmark to measure their performance, to measure their alpha. And this will include 50 crypto tokens, top 50, which will be, this index will be rebalanced automatically, very transparent, very smart. So we introduce a benchmark, which is very important for comparing funds performance. And also this index can be followed by those who just need a passive exposure to entire market, not just the Bitcoin or Ethereum. You can follow index. So I believe this will be a very big story. It will outperform in terms of turnover SPX in a decade or so. Our LAT crypto research team of 4 McKinsey and Deutsche Bank graduates estimated that capitalizations of crypto tokens will exceed 5 trillion by 2025, and turnover will exceed $30 trillion. And most of this valuation will be driven by asset-backed tokens.
It makes sense. So a few things, Valentin. Well, first of all, I'm honored to be the first to hear about your index of 50 different coins that we can use as a benchmark and an index to measure performance. So I think that's a fantastic idea. And by the time this episode is produced early next week, that news will already be out. So congratulations on that. Secondly, just going back to a little bit of what you were explaining, so essentially you're giving an opportunity for any asset, liquid or illiquid, to be tokenized, and then investors can then invest in it, as in through the token with the backing of that asset. So I'm curious because you mentioned some asset classes, even as illiquid and obscure as say fine art. Or real estate. So I wonder if perhaps we can go through an example, using either a piece of art or maybe a house as an example. And maybe you can explain, just walk us through the process on, let's say okay, so there's two sides here. There's the investor side, and then there's also the person that wants to tokenize their asset, correct?
Yes, we establish a link between them. So let's take an example of Mona Lisa, for example. If owners of Mona Lisa decides to tokenize it, to make it liquid and sell by fractions, they will apply via our site, and we will make a preliminary sale of tokens linked to Mona Lisa, and then after investors express sufficient interest, we start tokenization process. This includes...
Now, is the Mona Lisa must be appraised by a third party or something before you come up with a value, correct?
Our protocol allows make an appraisal or not. Normally, it's more attractive for investors. We estimate that it will be more attractive if there will be an appraisal. However, the price will be a market price. So the seller can put a minimum price and put an auction, and many contributors just participate in bidding for pieces of Mona Lisa. There will be several types of auctions available for initial Mona Lisa token offering, and then there will be secondary markets, so they can resell these tokens linked to Mona Lisa. What is interesting is how this link works. So it works like a forward, that on a settlement date, token holders will get cash equal to their share in this asset, in Mona Lisa. I remind this is not a utility token, and this is available only for those regions where it's not where it is properly registered or do not contradict local regulation. It's very unlike a utility token. So this token is linked by settlement date when this token owner gets cash. Alternatively, a token owner do not claim for cash. He can just roll up this token and get second token, which is replacing the previous one. So, in case if there is no sufficient demand for secondary token offering, this object shall be sold at auction, and then fiat cash received shall be distributed between asset owners. There is a custodian who is responsible for this. This custodian, in some jurisdiction, it is a trustee, owns part of this asset and has control over this asset in terms of selling this asset. At the same time, former owner of this asset, which still own some part, not less than 20%, can use it. So this is an additional value. He can still use this Mona Lisa, and then on a settlement date, either there is a rollover, new token are issued and sold, and previous tokens are burned, or this Mona Lisa goes to auction, fiat auction, and cash received from this auction is distributed between token owners. And there is a sequence of smart contracts which shall ensure that this works smoothly without any intervention of platform. So there is a big custodian which is regulated, which has capital, which has a very long history, and it is also insured. And there is a sequence of smart contracts which are audited, which are open sourced, open and they makes all automatic. And this sequence of smart contract is called liquid asset token protocol.
Okay, so that's a good example. So let's say, Valentin, let's say I am the owner of this Mona Lisa, and it gets appraised at $100 million, and I decide to tokenize 20% of that. First of all, how long is the settlement date from the initial beginning of the process? Is that varied based on? Is it customizable?
Yes, it is flexible. So asset owners, they try to create token attractive for investors. This will influence valuation. So if timing is shorter, there will be less deviation from underlying prices, and there will be perhaps less discount, time discount. This settlement date can range from few months to decades.
I see. Okay, and then so let's say I decide to do it for just 6 months. I want to tokenize 20% of my prized Mona Lisa. And then at the end of that 6 months, when the settlement date arrives, you said that a number of things can happen. Either do I have an opportunity now, let's say in the 6 months that I had tokenized my 20%, I said, hey, you know what, actually, I want to own this 100% again. Do I have an opportunity now as the majority owner to buy back that 20% that was tokenized?
There could be an option to buy back either at a fixed price or at market price, so you can order trustee to start to buy back it from the market, and when he collected sufficient share, then he can kind of make an obligatory option or to buy back, obligatory buyback. This is also customizable. There will be market forces which will determine best practices. And there will be vanilla option, which is very simple. So
then on the other side, let's say I'm an investor and I bought into this Mona Lisa. I guess each one of these assets, when they go through this process, it's almost like a mini ICO that they're doing, right? They're raising their own token for that very individual specific asset, in the hopes that the investors, in the hopes that it will appreciate in the future. And this is, I believe, the distinction that you made earlier, that it's not a utility token, which LAT is, right? That's what your company has for sort of like working capital almost, but this is actually a financial instrument, basically.
Yes, it looks like as securities or derivatives, these asset-backed tokens, and it depends on jurisdictions. And however, not everything is properly defined, and we are contributing to development of self-regulation rules for blockchain industry, for crypto economy, and we invite regulators to our work groups. We will have a work group at Blockchain Economic Forum, which we will hold in 31st of October to 1st of November. In New York, there will be 50 participants, ranging from large investors, entrepreneurs, to academics and central banks officials. They will have a discussion how to help crypto economy to be sustainable, to be more self-regulated, and to use existing legislation in favor of crypto economy.
So this is actually quite interesting, Valentin. And so it makes sense in my mind. It makes a lot of sense, especially for some of these alternative investments, or maybe not as liquid now. My other question then, on the flip side, is you had mentioned earlier that your platform tokenizes even things such as Apple shares, which is one of the most liquid companies, publicly traded companies in the world. So what benefits would an investor have to buy a tokenized version of, say, Apple or Facebook, what have you, as opposed to the actual equity in the markets?
At the moment, the value is for crypto investors. They do not need to exchange their crypto into fiat, send money to bank, then to broker, and to custody, pay fees to brokers and to everybody, and then in reverse order when they want to get crypto back. So it's too costful and too complicated, time-consuming process. What we provide is that just in few seconds they can make a trade to diversify their crypto, to exchange it to token, link it to Apple, so they escape volatility in cryptocurrencies very fast, almost with zero cost. That's our goal and value proposition for the first phase of development. In the future, we believe that our fiat trades, all capital markets will work in the same way. It will provide even less transaction costs. It will provide free leverage, almost free leverage settlement in few minutes, not T+1, 24/7 trading. Multiple asset classes at one place, and also OTC trading in a similar way, like it works for public stocks, for liquid public stocks.
It's pretty fascinating. I actually think that the potential is so huge here, because I just think of it as, let's say I had the majority of my assets in blockchain or cryptocurrency. I just think about, like, if I could literally mimic my PA, personal account trading, but with very little slippage and very fast. Across different asset classes, all on your platform, it'd be incredible, right? So, for example, let's say there's a market crash, then different asset classes behave differently. Some correct very quickly, and others are more stable. So, I could see myself, maybe selling out of some Apple shares or some of these more liquid, reactive. And then I could roll it into, say, buying gold or something like that, right?
Yes. It's you just click to commodities section and select token which you want to buy, and select your holdings. You can exchange directly, and this is another value proposition. You can exchange directly any token into other token.
Incredible.
You don't
and so
need
what
to,
is...
Yeah.
What is LAToken's business model? Does it act like an exchange and it collects a fee off of all the transactions?
Yes, this could be introduced, and there are also potential fees for leverage and for services like tokenization, KYC, like creation of funds, like following. So it's imagine that any trader can prove his performance and get followers who follow his investment portfolio, and he gets commissions, he gets a performance fee, management fee, and we also can take our part of this. So this makes...
Yeah, and we see that a lot in... We see that sort of social following aspect in liquid market trading, equity markets, and this sort of thing. There's a lot of platforms out there now doing that. It sounds so fascinating, Valentin. I think that it's one of the, crypto is often misunderstood, but it's very hyped about. But your company is one of the first ones that I actually I understand, and because being an investor myself and equity investor, I kind of understand the basis for it. It's almost to me it's akin to like setting up an exchange, which it goes back to the old story of the guys who made money during the gold rush were the guys who were selling the picks and shovels, and not necessarily the guys that were actually mining the gold. So the opportunity seems incredible. What you mentioned some stats before that your research team had come up with as far as total crypto market capitalization that you estimate in the next 5 to 10 years. What do you see as what does the future have in store for LAToken, for crypto in general? I mean, I think everyone is trying to figure this one out.
Sorry, could you repeat the last question? I'm sorry I interrupted.
What do you think that the future is for cryptocurrencies? You obviously are betting pretty large on the fact that there's going to be a market for these asset-backed tokenization of assets, liquid asset tokenization. What do you see as the eventual goal for LAToken?
So our goal is to help to bridge crypto and real economy. So tokens are used in very widely in transactions. First of all, in capital markets, in creating instruments which become more liquid. I'm not saying about fastly consuming goods like coffee. We are focusing on assets which live at least a few years, and they can be tokenized and traded for tokens, and it could expand not only to public and private equity and assets like real estate. They could go further because the transaction cost to issue token and to make fraction of any asset now becoming very, very low. That's a huge dramatic decline in price. If you make an ICO, you can pay 3 to 7% to an investment bank of your entire company. If you do, IPO. If you do token sale of your private company or of your house, there will be pretty small transaction fee. And this can be done very fastly. And you don't need a year to structure this process. You can do it in. You will be able to do it in few days. So this will create very new user cases, new opportunities, and I believe that not only entire capital markets and real estate and public and private equity, which in total worth $600 trillion, that many other assets will also be tradable. So it's a vast opportunity. It is fundamentally based on the fact that many middlemen can be replaced with technology that works better and faster.
Now, a follow-up to that, Valentin, do you see that there will still be room or space for non-asset-backed cryptocurrencies in the future?
Yes. The difference is that their currencies, their valuation is not linked to assets. It is correlated with demand for this based on transactions. So how many transactions are done in these currencies? So if there are many people who uses these currencies for buying other stocks and or coffee, this will increase account balances. So any person who uses this for transactions, they have account balances, which in total is something like demand for this cryptocurrency. And I think that there should be less volatile currencies, and to make it more widely used. And I think that LAT could become a stable coin sometime. First of all, there should be a very big user case, so very huge and sustainable turnover. So it's not speculation about future turnover, it's the fact that it is now very widely used. Then there will be an opportunity to decrease volatility, to make it stable and reliable for regular transactions, and this will make it competitive to existing fiat currencies.
Right. Absolutely. Well, Valentin, thank you so much for your time. It was extremely, extremely insightful and exciting to hear about the amazing company you're building in this very, very highly sought after and talked about space. I know that you guys have some offerings and this sort of thing. I don't want to get anyone in trouble, but maybe you could just direct us to the website or where we can find some more information about your company that the audience listening in could follow up and do some more research about LAToken.
Yeah, it's sale.latoken.com. Please hurry up, because token sale will be ended on 10th of October, and then it will be listed on crypto exchanges. And I think that it's better to jump in before, because additional liquidity could change.
So yeah, we fortunately we made the cutoff, so this is going to come out about before the deadline. So hopefully some of the listeners will get excited about what we had to talk about and head on over to your website to find out more about your offering. Thanks again, Valentin. It was such a pleasure to catch up with you and hear about your progress there, and we wish you the best of luck.
Thank you, Jake. Thanks to everybody. I'm very happy that I can, with our community, with entire blockchain world. I'm very happy that we can do together a very big change in the global economy and how people spend their time, how they can be more productive and efficient, and with blockchain. That's very exciting. I wish everybody to use these opportunities to bring new technology to the real economy. So yeah, have a big energy for this, and just spread this, but do it in a sustainable way.
Absolutely. Thank you so much. Thanks again. Take care now.
Have a nice day. Bye.
I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The J. Kim Show. I'd love to hear your comments. You can find me on Twitter at JKimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of two. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.